Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you're getting some good trades. Today we saw the RBNZ, the Reserve Bank of New Zealand, have a bit of a dovish tone in their sentiment going forward. Many in the marketplace had expected the RBNZ to look towards or give some forward guidance to a rate hike in their overnight interest rate in March. But today their dovish stance caused a fall off in the Kiwi dollar. And I want to share with you today, when this type of event occurs and when you're trading the dots guppies, what are some of the things you can do to potentially see where the market's going to go, especially when it goes beyond a level. Generally speaking, when we have a large announcement like a central bank announcement, we want to be aware of certain levels in the marketplace. And I can't think of anything better personally than to look at the weekly average daily range levels in the ADR Pro calculator. Let me show you what I'm talking about. Today we saw this big move down. It came down somewhere in here. Well, where was it going to? When we same chart, but we apply the average daily range weekly levels, we can see that we were sitting pretty much on a level, and we have a range here. The market had been range bound between the weekly high and the weekly mid high. The FOMC statement came out, the market moved down a bit, but then pushed back up basically about where it got started at. And then when the RBNZ statement came out, the market shot down, and what I was looking for was a move back towards the weekly open and then potentially on down to the weekly mid-low. The market has a tendency to move around from weekly range levels from one level to the next. Give you an example. Take a look at the Kiwi yen. We already had, based upon the dots guppy, a perspective of the market continuing to roll down. We had a long-term rollover right here in the long-term guppies. Today they were showing some downward decline, and it gave us an opportunity earlier in the morning to trade it down to the sell target number 2 level. Market kind of bounced around up and down and even tested the long-term guppies. In the FOMC statement, the market pushed down back towards the weekly open in this area between the weekly mid-low and the weekly mid-high. Market pushed back up, then the RBNZ statement came out, and look what the market did. Pinned right down to that weekly mid-low, breaking this low point. So I was looking at the potential of this running down. I actually, in my dots trade room, I entered a trade right around 84 and caught this move down towards the weekly mid-low. Take a look at a couple of other potential setups we had today. Was the pound Kiwi. Again, you can see here the pound Kiwi was kind of up and down. Here's some high, low, high, low. This happened during the FOMC statement where the market basically pushed up towards the buy target number 2 level and then fell back down. The RBNZ statement comes out. Everybody's expecting a strong comment about potential rate hike, and then they come out with this dovish comments about the unsustainability of the high Kiwi. Well, that caused a big move, and we see this shot up. Now, look what it did here. Just think about this for a moment. If it took out the average high coming across here, hopefully you can see this, there's an average high sitting right about in this area right here. You see that? Market went up, hit the buy target number 2, fell back over, and then when the announcement came out, it made a strong move up. Now, just imagine, had you made note, and I did tell the traders in my trade room, look for initial near-term range resistance and range support. So I was looking at that high point up there, and I was looking at this about average low point right there. The market did make that punch up, broke through here, and then look, had you just looked for the market to move up to the weekly mid-high and traded that, there's about a 50 pip trade right there between 2010 and 2060. Look at the Euro Kiwi, similar situation. You can see pretty distinctly between the weekly mid-low and the weekly low of the AD later that we have our range in place. Market pushed down a little bit beyond it, came back in it during the FOMC announcement, a little push back towards it, bounced back up, back and forth. But then when the RBNZ statement came out, big strong push up back towards the weekly open, which would be one of those levels to consider when looking at the weekly mid-high to weekly mid-low. So as you can see, just simply applying the average daily range pro calculator to your dots charts can help you identify targets, especially when the market makes a very strong move based on like a central bank comment beyond the buy target number 2 or beyond the sell target number 2. And the Kiwi yen is a great example of what we attempt to do every day in the dots trade room. Follow the direction of long-term guppies, look for the movement from level to level, and when the market gives us another potential setup, look for the market to trade in the direction of long-term guppies to a certain target. And the Kiwi yen proved today that this technique does show you some potential as you trade it. Again, simply take the average daily range pro calculator, apply the weekly levels, and look for the market to move towards these weekly levels or stay around a weekly level and then work off of it to the next level. If you want to learn more about the dots indicator, you can go to www.compassfx.com/dots. If you want to learn more about the average daily range pro calculator, and I got to tell you, this calculator is very similar to a tool used on Wall Street. Institutional traders watch the weekly ranges. Price has a tendency to move within the weekly ranges. So check it out. Go to www.compassfx.com/ADR. Well, this is Dean Malone with Compass FX. Hope some of the information I've shared with you about watching the weekly ranges will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.